All right. Good morning, everybody. So we're going to get a little bit of inflation today, the data anyways. And otherwise, we're just holding the line, got some auctions, watching everything unfold, looking for more data out of Japan, China. So commodities still doing good. It's getting a little tired, but after that move yesterday that gave a lot of it back, it's just making another run at it. Gold still has that November 25 really big bar, and it's the half of that bar that we have to stay above. We tried to get above it yesterday, came back in. We're back above it this morning. We'll see if it sticks. So we got Hong Kong up the most at 1/4%. So, as much as it sounds good, it's not carrying through. That's your Baba, Baidu, JD, BDD, all those guys. Europe down 1/2%. Everything else bleeding through the middle. It's just a market waiting for a reason. So we're going to get the optimism index. I think we're done with that already. That's just the feel good, right? That's not it's not connected to anything else. Past that, we have the productivity and labor costs. So 830 is going to be the biggest thing that we have on the table, and then we have auctions. These auctions aren't necessarily the big one, but don't want to overlook them. Probably use the IRX to check out those front end auctions. The momentum out of China, everybody was waiting for them to really come out with something good. And they have the power to come out with something good, but they just keep dragging their feet with all these minor stimulus events. Still looking at January for the big one. And if you seen the posts yesterday, YINN was getting hit like 5 or 6 times with more sweeps like we saw last week. I think they were hitting, what was it, the 50 strike. So last week they were hitting 30s, and then we gapped up really hard, ran right through it, and now they're hitting the 50s. We'll see. The market likes to wait for you to really size up and then pounce. So they got those 30s done. Maybe they got a little over exuberant on those 50s. They're short dated things too. It's like December 20. So yeah, we'll see. So like yesterday, the conversation is going on around the world on who's cutting rates or who's holding rates steady. It's going to be our turn soon enough with the FOMC. And yeah, holding the line and or cutting at this point is the norm. Everybody's just kind of dialing it back. We have the 3-week moving average that we made contact with yesterday. And by the way, you can't see it now because we've already moved it, but we stopped at the 1-day estimated move, the expected move. And it took all day to get there, but we finally got there. That's where the market stopped dropping yesterday. Then in the overnight, we hit that 3-week moving average, which it has shifted now, but it was up here 60-60 or 60-59. And then we bounced on the 10-day, which was a little bit higher. They're moving right now. So let's see if we can find this. There it is. So this is yesterday. That's the 1-day estimated move. That's what we were talking about. So we found some support. We now have the NASDAQ trying to run up into the 3-day and the ES trying to run up into the 3-day after finding support on the 10. VIX still holding at low levels. The DXY jumped through the 10 after coming back above the 3, and US dollar Japan back above both, and we're about to get the surge signal. So the surge is a 310 cross or a 38 cross. I've seen people use a 410, 310, 48, doesn't really matter. Just two really low moving averages. First, price crosses above the lower moving average, then it crosses above the higher moving average, and then the lower one needs to cross above the higher one. Or if it's a downward surge, do the whole thing in reverse. So we've got it in US dollar Japan almost. We're working on it in the DXY as well once the white line gets above the blue line. So we're getting that bottoming formation and that sort of move up. We just have to hold the line, right? And that's what it's going to come down to, especially with the S&P resting on that 10 now. We've been correcting in time, and part of that correction in time is waiting for the 10-day to get caught up with us. So we were staying ahead of it, running, then we flattened out. And that gave the 10 time to catch up with us. Of course, it started to flatten out a bit too. So once it did, we came down and tested it. If it helps to see it on the daily, then there's your run. So we're there. Now what? If it doesn't hold, that puts us on track for the green line. That's the 20 period moving average, 60-15-ish. It's not that much, right? It's another 50 points. It's not really a big deal. We need a decent pause and pullback if we're going to get that Santa Claus rally into 7,000. Otherwise, we'd get overextended and it would look a bit like Palantir or, United Airlines or something like that. We don't want the S&P to look like that. The volumes are light, but they're not really hedging, extra hedging this morning. 50 isn't bad. 55. It's a little light. It shows that they are concerned, sitting out, waiting, but we don't see any indications of additional hedging at this point. We're running out of time on the contracts that we are on. It's very likely that by the end of the week, we'll be rolling out. Just keep track of the volume on the current contract versus the next series out. So you can see we got 10 days left on this one. By the end of the week, it's very likely we'll start seeing volumes on the March series. Next week, on Monday, if your broker didn't already roll you forward, you're going to want to manually roll. I wouldn't do it yet. The volumes are still really light. We talked about the put and call wall yesterday. We still got 61.11 to the upside for the call wall. It's basically Friday's high. That really isn't any different. The volatility trigger is now tangled up with the 3-week and the 10-day. Below all of that, if we can get to the ADR half, we're at the put wall. Below that puts us into 0 gamma, and then things get a little nasty. 60-20 for the 20-period moving average on the daily is protecting a full ADR and 60-11 cog line, which will act a bit like gravity. If we get near it, it'll just draw us in. ADR, today's average daily range is 51 points. It's 20.5 higher, 25.5 lower. So it's a really tight range, all things considered. It's worth noting that any run to the upside can get us into the ADR half, but we still wouldn't be outside of yesterday's RTH range, right? This is the regular trading hours high. And this is the ADR half. So we can run up and hit that. We still wouldn't have an inside day breakout at that point. Even if we run up and we get through the RTH high, we still have the Globex high to deal with, 61.05. We got to get through that so that we can challenge Friday's high, 60.11 cog line. For the downside, we've already broke out of it. We already took it. It was a minor breakdown. We didn't even get to the 111, so it's possible that we can expand a little bit more to the downside, especially now that we've run up into the 786 and we failed to get through it. At this point, we're just kind of chopping about here. So we could fade back down, retest that 111, or actually test it since we didn't get to it. Otherwise, dial it in and forget the entire RTH of the entire range of yesterday and just use the RTH. When we do that, you can see that we're above the 786. We ran right through it like it wasn't even there. We're now holding above it. That puts us on track for a half back. Get through that. Get into 60.92 cog line or the ADR half. And we are expanded above VWAP and taking it with us. So we need to keep that. But remember, reciprocation with VWAP. It's like a jigsaw. If you get X distance above it, you're likely going to also get X distance below it at some point. At least as long as we're crisscrossing back and forth like we were back here. Once we started drive, like we did yesterday, when we finally started to drive away from it, then we just kept exceeding that expectation. This is a narrow ADR. And like all volatility, the market wisdom is when volatility is low, it has nowhere to go but up. It's not exactly true, but that's the adage we say. So if the ADR is low right now, the expectation is it's going to go up. It will expand again. So looking at the central pivots, today's pivot is lower than yesterday's. It's also really wide. The fact that it's lower than yesterday puts us in a bearish bias. The fact that price opened up underneath that channel adds another additional bearish bias. We have an MDP right now. That's a missed daily pivot. And the base case estimate is that we will come up and we will hit that at least because, well, that's what markets do 80% of the time anyways. So if we continue this drive to the upside, we got to get to that ADR central pivot, everything else that's in our way one level at a time. This floor pivot with this really wide channel implies that if we break out, the breakout won't stick. Now these wide channels don't make price do anything. The wide channel just implies that breakouts won't hold. We'll come back in again. We are underneath the weekly pivot. So if we can get through the daily pivot, then we want to focus on getting through the weekly next. It shouldn't be too difficult. We ran through it on the way down like it wasn't even there. And then we pulled back up and tested against it, which at that point, it acted as a resistance. So far, the week's profile is really tight. Makes sense because we haven't really done anything. If we just focus on last week and this week, we can see how price opened this week and dropped down into this high volume node. It's kind of a good example of why we want to pay attention to last week's price action. It provides insight. We also now have the point of control down here with us. That kind of makes sense. We spent some time down here yesterday. We're now above the point of control. Kind of need to keep it, but if we retrace to the downside, 60.65 is the point of control on the week. It's where the greatest amount of trading took place, and it's likely that we'll see more trading at that spot if we happen to revisit it. On a side note, and I haven't dug deep enough yet on this, this dropped down before we rallied back up, and then we came back down again and we cut through it. Now we're back above. Want to dig more into that volume structure right there and see if that's where this volume profile came from. It could have been later in the day when we built out more volume there, but I would be interested to see if it was what played Save-A-Ho yesterday. I think the air pocket is pretty obvious, but if this line in the sand doesn't hold and we get under 60.50, then we've got this point of control from 60.18, then the round number, then it gets deep, and we're looking at 50.50, or excuse me, 59.50, and then 59.11 cog line way down here. All right, so shallow area, point of control, more shallow area, a little bit of structure here, shallow area, structure down here. This level's likely very assisting. We have this back here and here. So I don't think we're going to get through that very easy. It would likely take something really negative to take us to the downside below that level. We can get to that level without too much effort. I don't think the news would have to be that bad to see 60.20 today. This little bit of price action is where this volume comes from. And now we're working it out at that same level. If we can build out enough volume here, staying in this zone, then we can bring that point of control down. But it would have to do more than this And so far, we're not seeing signs of that. That little bit of volume that I was just pointing out for that dip yesterday, that's not going to do it. We need more than that. Otherwise, we're not looking to see this profile adjust too much throughout the week. If we start to tighten everything up, it'll diminish more and more like that. And even at this point, we still wouldn't have touched these candles yet. So we could end up with a lower D. Or if we begin to run back up, turn this whole thing into a D, right? We start getting structure through here, and then we would just have that entire shape, the classic D. So we're in the thick of it. We want to watch that 60-70 area, or maybe 60-85. See if we start building it out, magnetize up into that level. So we had this point of control marked for about a week. We don't need it anymore. We've taken it off the table. It's where we got tangled up yesterday and finally stalled. But we do have a new VPOC from yesterday. So if we continue moving to the upside, we're going to hit yesterday's profile. And we can see this morning, they're already building it out. Get this high volume node here. It's interesting, though, that they're front running that level, like protecting it, defending against it. We're not even there yet, and they're already coming in against it. Generally, these levels will act like a magnet, and at this point, it's acting like a reverse magnet, right? It's repelling price before we even get there. TPO is really not reflecting the same as volume profile either. TPO, time, price, opportunity. So we got the new VPOC. I think you could probably take that tick off and it'd line up maybe a little bit better. Yeah. 6074 is the VPOC. So looking at things for the week, we're still not to the edge of the weekly expected move. 6050 is that line in the sand. We're close to it. Wouldn't surprise me if we just go on down there and finish it off. Otherwise, yesterday's level, we got to get through it. The half back of the RTH and then the half back of the entire day. We've got these previous examples where we ran up and we kind of hit a ceiling, faded back for a day, and then came back up, broke through that ceiling and continued on. So we've set this ceiling. We weren't able to get through it after multiple days, and we've pulled back. So this could just be the pullback, right? Like a sticky door. You try to open it and it jams. What do? You just back up, put your shoulder in it, get a little running start. So same thing, tried to get through the door, couldn't get through. Maybe this is price backing up for another run like it did back here. On the other hand, it can turn into that. So today is the day that's really important. There's the red day. That's our red day over here. This is the next day after that red day. Now there's a lot of differences. We had a lot of wick down here. We don't have a lot of wick down here. But let's just see how the day unfolds and really think about what this can lead to next. It's not just about today, right? Where we go from here. We're still above the 10-day, but we are working our way back up again. We kind of zoom in here a little bit. So we know we hit it already, but this doesn't track minute by minute, right? It's tracking candle close. So we came down, we hit the 10, we're working our way back up. We've seen that happen before where we've actually crossed under it and then came back up, crossed under it, came back up. Just a part of a wave. But we're still 2% above the 10-week, and that's a good place to be. 2% above the 10 is fine. If we do get negative, though, it gives you some insight into what kind of move we could be looking at in the S&P. Yeah, a good 2% move to the downside. What's 2% among friends, right? A 2% move is 59.50. That's where that blue line is right there. That's what we're talking about. The 10-week moving average. So we mentioned YINN yesterday. It's up over 26%, 26.5 in a 5-day period. And that's counting that it's down 11% this morning. So it was up 40-something% before it faded. Now it's showing 35.91 on the daily because that's how Thinkorswim rolls. But if we go into the pre-market, we could see it's at 32 basically. So it closed at 36. It's down to 32 this morning. And there was a lot of calls that came in for 50 yesterday. I think they got a little ahead of their skis, but the stimulus doesn't seem to be as breathtaking as everybody was looking to see. Behind that, we've got the China KWEB constituents, and then the MCHI, which is also China, Nat Gas, which is just a joke, then TLT, and IGV, which is tech. So we've been on this kick about chips versus tech, right? That's kind of been the dichotomy. It'd be nice if we had both, but capital seems to be flowing from one to the other instead of both. So keep an eye on both of them. Just like with Monday, chips were down, software was up, and that started to rotate through the day. We started to get chips up, software down. So at this point this morning, they're not down enough, 0.34 we want 0.5. So they're not down enough to meet our qualifications. And semiconductors also kind of flat. We need more out of them. Airlines up 1.7. Transportation's 1.25. The Mag 7 group also up 1.25. Bitcoin up this morning. So that's what we've had, right? The Mag 7 up, Bitcoin up. We're just missing semiconductors. I think that's your ticket today. If you want to see that rip rally or even just a good recovery day, we got to have chips. We've got the Magnificent Seven up, but I think that might just be Google all by itself because Google had news, and this is a spread, right? It's like a ETF where it's looking at the Mag 7 combined, Apple, Google, Microsoft, Tesla, the whole group. But one name like Google can move that thing. If we just set that aside and say we don't have the Mag 7 this morning, then we've got Bitcoin, commodities like gold, transportation, which is, don't really need it for our intraday trade. We just need it for the broader market to stay bullish. Got some small caps, mid caps. We need those chips. Yeah, we got a really good thing started. We just need to top it off. So the chips should be a good tell today, like an indicator to watch. Keep your eye on SMH. See that transport's up, but it's really, we're just getting these little algo prints. So that's not what we're looking for. Bitcoin's up. It's actually got flows moving in that directions. Gold miners. I mean, they're not going to get too far. Ag, also just a little print. Uranium, I mean, that thing took, quite a bit of a drop. So maybe a dead cat bounce here. IGV or IGM, either way you want to look at those. It's still tech. The IGV would be more, quote, software and more specific to software, whereas IGM is just your broader generic, like a XLK tech. Silver needs to get in the game. It's not up enough. Stalled out, really fighting with yesterday's range. I mean, look at that really clean price action in silver yesterday. That is just textbook computer operated, very nice. I think it's going to be hard to get through that yet, and we don't know that they're done yet. For everything else, the China group, nat gas, bonds, banks, all down, weak. But we have the VIX down too. So not really offering a lot on that side of things. No real volatility coming in. We need chips. Software is way more extended. If we're gonna get a pullback in that, that could really fuel this chip run. So that's really one of the big things to be looking for today. S&P, 4 names are down 0.5%. 13 are up 0.5%. So 13% of the S&P is up 0.5%. It's not bad, but these aren't the names we need to see. Google's up, had news. We got Meta, so one of the Mag 7. Tesla down there hiding. Got a couple of chip names like AMD. We need more, right? So it's a good start. Seven names in the NASDAQ down 0.5%. 16% of the NASDAQ is up 0.5%. Meta, Google, Tesla, same names. Got a couple of chips like MU, AMD, ASML. It's not enough, right? We need some of those big ones like NVIDIA. So our 1-day estimated move, I think it gets updated, right? This one, that may not be. Let me just check. No, it's December 10. That's still showing yesterday's move. SPY won't update until 9:30, right? So that's the yesterday's move that I was talking about when we came down and hit it on the ES. So if I put the ES back on here, there's your 1-day estimated move for today. 60.32 cog line to the downside, 6,100 to the upside. That's your plus or minus 1-day expected move. I know it seems like a long ways off, but that's what they said yesterday too. And we just kept falling and falling until we finally got there. I'm not saying we're going to fall and fall and fall until we get there today. Just it runs both ways, right? We got an upside one or a downside one. Stay above that volatility trigger. Look for the chips to come in, and we can run chips and software both. That's fine. Otherwise, we want to see software kind of just take a back seat, hold the line. Doesn't really need to fall. Just stay sideways or run with us. I don't think that rise in the dollar is going to be too much of an issue, but keep your eye on crude. That will be an issue. It'll tie right back into the carry trade. All right, so that's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.